Luna cryptocurrency collapse, how UST broke and why it matters. Before we begin, please like and subscribe to my channel. Okay, let's get started. The cryptocurrency market isn't pretty right now. Red is everywhere. Bitcoin and Ether are at their lowest points since 2020, and altcoins like dogecoin and Cardano are faring even worse. While it's painful for crypto investors, this dip is far from unprecedented. Cryptocurrencies are infamous for their volatility, and tempestuous economic conditions are bringing down not just crypto, but the stock market too. What is unprecedented, however, is the collapse of the Luna cryptocurrency and its associated terraUSD stablecoin, aka UST. You may not have heard of UST before, or know what a stablecoin is, but it's a big deal. Billions of dollars in crypto wealth have been vaporized, sending shockwaves throughout the whole market. There are two intertwined stories here, that of the UST stablecoin and that of Luna, both of which are part of the Terra blockchain. The UST coin is designed to retain a value of $1 at all times, but it was depegged last Monday, on May 9th, and has since fallen to just 17 cents. Then there's Luna, the centerpiece of Terra's ecosystem. Its value has collapsed in one of the most stunning crypto crashes ever recorded. The coin's price fell from $116 in April to just a penny on Thursday. It's fallen further, trading over the weekend for a fraction of a cent. At the time of writing, Luna is down to 1/8 of a penny. Such an implosion has been seen for small-cap memecoins in the past, but never for something the size of Luna, which had a market cap of over $40 billion just last month. The Terra/UST coin is different from Tether and USDC in a key way. It's not backed by actual US dollars, but rather is what's known as an algorithmic or decentralized stablecoin. The idea is that, through a few clever mechanisms, plus billions in Bitcoin reserves, the UST's dollar peg can be maintained without it having to be backed by the dollar. What went wrong? It all started on Saturday, May 7th. Over $2 billion worth of UST was unstaked, taken out of the Anchor protocol, and hundreds of millions of that was immediately sold. Whether this was a reaction to a particularly volatile period, the rise in interest rates has particularly affected cryptocurrency prices, or a more malicious attack on Terra's system is a topic of debate. Such huge sells pushed the price down to 91 cents. Traders tried to take advantage of arbitrage, exchanging 90 cents worth of UST for $1 worth of Luna, but then a speed bump appeared. Only $100 million worth of UST can be burned for Luna per day. Investors, already flighty in the current gloomy market, flocked to sell their UST once the stablecoin couldn't retain its peg. It bounced between 30 cents and 50 cents in the week following the initial depeg, but has now fallen to a steady low of under 20 cents. Its market cap, which was around $18 billion in early May, now stands at $2 billion. It's worse for Luna holders. The value of Luna tokens has almost completely disappeared. After reaching a high of just under $120 in April, Luna's current price is a fraction of a penny. On the possibility of this being a malicious attack, some have speculated that an attacker attempted to break UST in order to profit from shorting Bitcoin, that is, betting on its price going down. If would-be attackers created a large position in UST and then unstaked $2 billion at once, it could depeg UST, which would mean Terra's team would have to sell portions of its Bitcoin reserve to repeg the stablecoin. Once investors saw that UST lost its peg, they would then rush to unstake and sell their UST, which would require more Bitcoin reserves to be sold, adding further sell pressure. Again, this is still speculation. UST is unsure whether the depeg was caused by a coordinated attack or not, but said that the responsibility is on crypto developers to create more secure systems. Why does it matter? This matters for three reasons. First, over $15 billion in crypto value has been wiped out through Luna and UST alone. There have been anecdotal reports of self-harm by those who had most of their savings staked in UST, though these can't be confirmed. It's clear that a lot of people lost a lot of money in the collapse. The damage isn't contained to Terra's ecosystem though, as Fortis Digital's Burrows notes. Many who were exposed to Luna and UST would have sold off big parts of their crypto portfolio to recoup some of the damage, pulling the entire market down. Second, it raises questions about other stablecoins. Again, UST was unusual in that it was an algorithmic stablecoin, unlike Tether and USDC. But the stability of those coins has always been somewhat in doubt. For instance, New York's Attorney General last year accused Tether of lying about how much it actually held in dollar reserves. Burroughs worries that, if UST was attacked, similar plays could be made against the others. Last, and possibly most significantly, the collapse of UST has caught the attention of powerful politicians and regulators. Secretary of the Treasury Janet Yellen said on Tuesday that UST's depegging simply illustrates that this, stablecoins, is a rapidly growing product and there are rapidly growing risks. What's next for Luna and UST? It's been a rough week for Terra developers since UST depegged on May 10th. Prominent figures have asked pertinent questions about Terra's Bitcoin reserves, and the Terra blockchain has stopped operating on 2 occasions. Meanwhile, Do Kwon, CEO of Terra Labs, says he has a plan to restore Luna's value and repeg UST. As noted above, the Luna Foundation Guard had around $2.3 billion worth of Bitcoin. In the event of a depegging, those reserves were to be sold, with the resulting liquidity used to buy UST back up to $1. So why didn't it work? Some have questioned how the LFG actually used the money. Over the course of a day, on May 9th, around $1.6 billion worth of Bitcoin was sent from LFG's wallet to Gemini, a crypto exchange. Another $875 million was sent to a wallet on Binance, the world's biggest crypto exchange. What happened from there can't be traced on either Gemini or Binance. On Friday, Kwon proposed a solution to Luna's ills. The Terra Labs CEO suggested forking Terra, meaning creating a new blockchain. A snapshot of current Luna and UST holders would be taken, and 900 million Luna tokens would be distributed among this group, with the remaining 100 million going to a community pool to fund future developments. In essence, it's an attempt to reset the blockchain to its state before the depegging. Many, including Zhao, are skeptical that the plan will work. That's it for today's video. Please like, share and subscribe.